Big disclaimer, we are not trading professionals. Please consult a professional for financial advice. Trading stocks is risky, with nearly 90% of people losing their money. That being said, if you have some money that you want to experiment with, and don't need for your rent mortgage, here are some tips on trading the stock market. You may not have been in the stock market for very long, but if you've ever considered getting involved in short selling, then you already know how profitable it can be. The first thing that you need to know about short selling is how it works and why some people love doing it while others hate it. Short selling is selling a stock for less than the market value. This can be done by a stock trader or by a dealer who buys a stock and then sells it at a price lower than what the stock is worth. There are many benefits of using short selling to get into the market when it's low, but you have to be willing to take some risks. The biggest risk involves the fact that you could lose money on your short sale investment. When you sell a stock, you're taking out a loan against that stock. If the stock isn't as high as you thought it would be when you purchased it, you're going to lose money. This is why many people avoid it. It also makes a big difference whether you use an agency or if you do it yourself. If you try to do it yourself and fail, you can lose money. A broker or someone who works for a company won't tell you anything unless you ask him or her. The big risk involved in short selling is that you will end up losing money on your investment. When you're using this method, you are only buying stock for less than it is worth. If the stock isn't as high as you thought it would be when you bought it, you will end up losing money on your short sale. This is why most people stay away from this method. However, there are other ways to get into the market when it's low. Many people like to get involved with penny stock trading because they have a lot of money to get into the market without spending much money. Penny stocks are very low-priced stocks that have a low risk of making a profit. If you're willing to take a bit more risk than what you think you can handle, you can make a lot of money in this area. If you are only interested in stocks that have a low risk factor, you can go online and search for companies that are poised to become big and start looking at them. You'll find that these stocks usually won't last very long, so you're not really risking too much when you do this. If you have a lot of money, you can still get involved in making money by shorting stocks by going to online brokers and asking them if they will work with you to make your trades. They will usually do this for free if you ask them for one. The biggest thing you have to remember is that you have to be willing to lose some to profit. If you are just starting, it's best to stick to the stock market until you become more experienced. If you don't make any money right away, you won't have to worry about learning how to make money by shorting stocks. It may take a while, but you can move on to the next method once you're comfortable. To get started in making money shorting stocks, you need to know what you're doing in the stock market first. Don't get into the game until you know all of the terminologies. Ensure that you know what you're investing in and what you're buying or selling. Even though there is a lot of jargon that goes into the market, you don't need to be a technical genius just to get started.